The Fed is considering preempting its strategy to prevent inflation. What does this mean for the housing market? We'll talk about it all on Tom's Take. You're definitely going to want to watch this one. So news came out last week that the Federal Reserve, they're considering abandoning its long-time strategy of using the benchmark rate to preemptively prevent inflation from rising above its 2% target. So that's a lot of economic mumbo-jumbo. What it means is that in 2019, Federal Reserve Chair Jerome Powell, he's come out and said this, that in 2019 the Fed formed its current policy-making strategy, and they're wrapping up their review, and they're going to be announcing which direction they're going to be going in the near future. So kind of a non-answer. The point is, this is one of the first times in a while that the Fed's talked about changing their strategy with how they use that benchmark rate. And the reason this is so important is because that benchmark rate's one of the reasons why we're seeing 3% interest rates on a 30-year fixed loan, why we're seeing some people get below 3, and jumbos coming in at like 3 1/8, 3 1/4, all those sort of sexy rates we've been talking about for a while. This would be a bit of a change. Now, the Fed doesn't set the mortgage rate. That's really important to acknowledge here. And kind of how it works is that if the Fed allows inflation to rise above the 2% target, it would put upward pressure on mortgage rates because investors who buy fixed assets use inflation as the mainstay of their calculation that determines the yield or the return that they're willing to accept. So what happens is higher inflations, that can eat into bond yields. So when you eat into bond yields, the investors buying those bonds, they want higher returns. And when they're mortgage-backed securities, the way to get higher returns is with higher fees, higher rates. So this isn't something that's happening. In fact, I don't think this happens anytime soon until the economy's on more certain ground. Not so much the housing market, the rest of the economy. And what the Neel Kashkari, the president of the Federal Reserve in Minneapolis, said is that the current strategy of dealing with the coronavirus and the pandemic and all that sort of stuff, because it's done in a patchwork fashion, leaving it up to local states and local governments, that's going to continue to suppress economic growth. Again, not housing. We're seeing housing being the mainstay of economic growth right now. We're talking about everything else. So what this means is this. These rates are not going to last forever. If you're looking to get into the home that you want to live in a long time, or you're a seller and you're thinking, how can I cash out and maximize my profits because I'm thinking about downsizing the next couple years, be aware. The Fed is talking about changing their policy. Nothing's happened yet. It doesn't mean it's going to happen or anything like that. It's coming down the pike. That's what this tells me, that the Fed is starting to think about what happens post-pandemic, what happens post 3% mortgage rates. Because when rates are at their historically lowest levels ever, it never lasts forever. So the takeaway here is if you're thinking about making a move and trying to cash out with your current home and get that best ROI possible on the property, get as much money as possible out of the sale, or you're a buyer and you're trying to find that 20-year property and want to lock in a super low interest rate, this might be the opportunity to do it. We don't know what's going to happen. There's an election coming up that could change the composition of the Fed, who gets appointed, all that sort of stuff. Nobody knows. The point is there's already talk of a policy change which will affect the consumer if it actually happens. The good news about politics in Washington is it takes them forever to get anything done anyway, so we got plenty of time to figure this out and make the right decision for yourself. Any questions? You know where to reach me. Shoot me a ping, a DM, whatever you want to do, and we'll be back next week.